Australian dollar's a little softer this week, not quite reaching 77 cents, then falling back below 76 cents. That's not really a very dramatic fall by the Aussie dollar standards, as it is still finding support from the domestic economy. On Tuesday, we had the first RBA board meeting under new Governor Philip Lowe. The statement was pretty similar to September and didn't drop any particular hint that a rate cut is being seriously considered near term. A lot of the statement focused on the housing market, where the RBA made the case that the housing market isn't really too bubbly at the moment. They particularly focused on the huge increase in supply of apartments that's likely to hit the market over the next couple of years, and that rents are already growing at a very slow pace. The RBA did sound a note of caution over consumer spending in Tuesday's statement, but on Wednesday we got some slightly better news. August retail sales rose 0.4%. That was stronger than expectations. Still, the consumer is fairly cautious overall, with sales growth up a modest 2.8% year over year. After the statement, pricing for another RBA cash rate cut this year has fallen a little bit further, now only pricing in a 25% chance of a rate cut by Christmas. So the Aussie dollar is finding some support from this waning pricing for another RBA rate cut. It's also finding support from commodity prices, which continue to rise. In particular, the price of a tonne of coal leaving Newcastle rose above $80 this week for the first time since June 2014. So Australia's domestic economy and commodity prices are still mostly quite supportive for the Aussie. Instead, the pressure on the Aussie dollar has come from a stronger US dollar. The US dollar is actually up against all major currencies over the past week. A key factor has been a swathe of commentary from Fed officials talking up the US economy and also insisting that they won't be swayed by political pressure, and therefore that they may well raise rates at the November meeting, even though it's less than a week before the voting takes place for the presidential election. Markets are still fairly sceptical about the prospect of the Fed hiking rates just before the election, placing only about a 15% probability on that outcome. The probability of a rate hike before year end, however, rises to 55%. In the week ahead, Australia's calendar is reasonably quiet, with updates on consumer sentiment for October and business sentiment for September. Otherwise, all eyes will be on foreign developments, particularly in the US, where we expect that this lingering expectation of higher interest rates will support the US dollar near term. That's likely to mean that the Aussie dollar runs out of steam on rallies to about 76.50 and instead trends towards about the 75 cent mark and potentially a little bit lower. We'll speak to you next week.